Hey everybody, I'm back with another video for Opendoor Technology. It's been a while. It's been a few days since I covered Opendoor because Opendoor has been acting kind of funny. But what I wanted to do, I wanted to analyze the chart a little bit. I wanted to figure out why it keeps going up, then down intraday, right? So listen up, watch the video, and I'm going to show you exactly what I found out. All right, first we're going to go over the weekly and then work our way down like we always do. Weekly, daily, then probably the hourly. Not too sure if I'm going to go below it hourly, but we'll see. So the weekly chart is right here, and we have 3 weeks red, just like we did here on the Opendoor chart back in August. So we have 3 weeks red. Doesn't mean we're going to repeat this. It doesn't mean it's going to happen, but I would love for this to happen. 3 weeks red, then 2 green weeks, but there's no guarantee that's going to happen. But right now, we have 3 weeks red. All right, daily chart, consolidating heavily. We have 1, 2, 3, 4, almost 5 days of consolidation. So we can either pump up soon or maybe go down soon, either or. But something is going to happen probably very soon. That's a lot of consolidation right there on the same price range. And I'm going to show you what I found out. And it's kind of based on the technicals, okay? I'm going to get back to that in a few minutes. On the hourly chart, so here's the hourly chart. It's kind of crazy, right? It's kind of crazy. The same thing's happening every single day. And I told you, I made a video a while back. The best thing to do right now while Opendoor is trading like this, buy the low and then sell the high. And then when it goes down again, buy the low, sell the high. It's been working. It's been working so far. That's what I've been doing. A lot of people in Discord have been doing it. Join the Discord. Trying to tell everybody to join the Discord. We've been talking about this for days now, about how Opendoor has been trading. So look, on September 30th, it went down to $7.75, went to $8.41, came back down to $8. October 1st, went down to $7.85, went to $8.80, came back down to $8. On October 2nd, $7.81, went to $8.34, back down to $8 again. Okay, and October 3rd, opened up at $8, went to $8.80. The strong resistance, we're having big trouble at $8.80. Every time we touch $8.80, we go straight down, right? So went from $8 to $8.80 and all the way back down to $8.07, almost $8 again. So, the big institutions, the big investors, the Jane Street, they're making a lot of money trading like this. I mean, a lot, because they're buying the low and then selling the high, and then they're making money when it goes down over and over again. 1, 2, 3, about 4 days in a row. They're making big money doing this. But I don't think they're going to do this forever. But, they're consolidating the price at a certain range, the $8 range. And eventually, I think we will move up to $9 at some point. But, if they're buying the low, selling the high, you can use that strategy as well to make money, right? So just take note of that, how the price is moving, low 8s. And then goes to the 870 to 880 area, and then around 1230, 130, 230, it comes down. On October 3rd, it dumped at 130. On October 2nd, it dumped on around 1:30, 2 o'clock area, right? October 1st, it dumped at 2:30. September 30th, it dumped at 1:30. So between 1 o'clock and 2:30 area, you got to be careful. Opendoor, right? So that's what I've been seeing as a pattern so far. We closed at 8:11. After hours are showing 8:16, 8:17, and we're right here between the support and resistance of $8 and $8.30. So that's what we're looking for. We're looking for a break of $8.30 on Monday. If we can go up, higher, $8.30 is going to be our resistance, and then the other one is going to be at $8.50. Then once we break $8.50, if we can break $8.50, the big one, $8.80. That's the main boss. We can't break $8.80. Every time I touch $8.80, we come back down again. Every single time. That's like the main boss we need to defeat, right? So that's what's going on. That's what's going on right now for Opendoor Technology. So I want to look at this website real quick, and then I'll come back to what I was saying earlier about what I've seen about the technicals on when we may start moving up again, on a nice huge uptrend. I'm not talking about a pump, but like, a nice uptrend. But first, this website I want to show you probably already know, but it says we are close to shipping a relatively big change. Users won't notice this for a week or two. Super bullish. PR shipped at 12:57 a.m. this morning, turning on feature flag soon. Said in a post on Thursday. So you might have seen this already, right? Over the weekend, one user asked, about the possibility of Opendoor reaching break even profitability by 2026. He says yes, but won't have an actual plan or forecast to share until earnings. And we all know, Eric Wu purchased $2 million worth of shares at $6.65 a piece. And the retail sentiment right now, currently around the company, trended in the bearish territory at the time of the writing. If it's bearish sentiment right now, it means people aren't buying, and it may start going up. That's why I always say, stocks usually go up when people aren't paying attention. So if the sentiment is bearish, it means a lot of retail traders are looking elsewhere. And then when the big guys see that the retail traders aren't paying attention, that's when they pump it up. A lot of times that happens. So I'm not worried about the sentiment. Not at all. Only thing I look at is the news and the chart, the volume, indicators, RSI, MACD, Bollinger Bands, moving averages. That's what I look at. So I'm not worried about sentiment at all. But yeah, for Opendoor. So this is what I've seen. I had to look at Carvana a little bit. I said, why are we moving like this, right? Why are we moving sideways so much? How come we're not going up, right? So look, Carvana. Look at Carvana because, they compare Opendoor to Carvana a lot, right? So I want to see when Carvana was at 355, right? I want to see, where the RSI and MACD was, because RSI and MACD is very important. It tells you a lot. So the RSI for Carvana, at 355 was pretty low. And then when it did pump up, the RSI was pretty high, way up here, right? And the MACD was pretty high also. And then it came down to the RSI of the 50. 50s is a good area where you want the RSI to drop to. If there's profit taking, you want it to drop to like 50. You don't want it to go no lower below than 50. If it does, you want to hope for it to come up to 50 again in the hold. 50 is a main area for the RSI. So it came back down to 50, and then it came back up, and back down to 50 again, over and over again, up 50, up and back down to 50 again, as it was going up, right? And when it pumped up again, overbought, it came back down to around the 50 area again. So that's what we want to look for. We want to look for Opendoor to do something similar to that. Every time it pumps up, we want it to come back down to the RSI at 50 area. And then the other thing we want to look for is we want to see Opendoor follow this line right here, kind of like a blue purplish line, the mid Bollinger Band. See how Carvana traded along this mid Bollinger Band as it was going up? When it went up, it came back down to the mid Bollinger Band. It went up and just traded along the mid Bollinger Band for a long time. And then when it dipped, it touched the lower Bollinger Band, and then it pumped back up again. So that's the kind of trade pattern that you want to see when Opendoor starts to move, in a good uptrend. Follow this mid Bollinger Band, and if it does dip, touch the mid Bollinger Band and go back up, or touch the lower Bollinger Band and go back up. That's what you're looking for. So the RSI for Carvana, was at 50, and the MACD was going up. But as long as the RSI is, in a good range, not too worried about the MACD that much. So let's look at Opendoor now. So Opendoor right here, it pumped up from 50 cent, and it came up to the overbought area, right around this area. This is overbought, and then it came down to the 59 RSI, and then it went up again, and then it came back down, never hit the 50 area, and it's still to the overbought area right now for RSI. This is the weekly, very important to see where the stock is going to go long term. So right now, Opendoor is at the 72 RSI area. So, what that means is that Opendoor is kind of overbought on the RSI and the MACD. So that's possibly why we're not moving up just yet. So it doesn't mean that, we need a big price drop for Opendoor to reset the RSI and the MACD back to the 50 area. It just means that we need more volume. Once Opendoor started getting more volume, I think Opendoor will start to get back on track again. So what are we waiting for? We're waiting for this RSI to dip maybe a little bit lower. Right now it's like at 72, and we would like to see it to the the 60, 50 area until we can get a nice uptrend similar to like this right here, like this kind of uptrend. That's what we're looking for. But I think Opendoor RSI just needs to come down a little bit more before we can get an uptrend like that. And for that to happen, as I said, we're going to need a lot more volume for Opendoor Technology. And right now, we're kind of losing some volume. September 19th, we had 1.7 billion. September 26th, 1.4 billion. And October 3rd, 892 million volume. So we're kind of losing volume right now. So it's taking forever for the indicators to reset because we're losing volume. It doesn't mean Opendoor can't go up. It just means that we probably won't get a nice fluid uptrend until the RSI come down just a little bit lower, a little bit lower to 60, 50, anything like that. I'd be happy with. And if you look at the daily chart, the RSI is right around 52, 53, and the MACD is coming down some. So that's not bad. It could mean that we may see some green days for this week based on, the RSI and the MACD. But we need the MACD to turn a little bit to the positive side. As far as these red bars right here, we need to see some green candlesticks and some shortened red bars on the MACD to show that, a reversal is coming and we can get some green days for this week ahead. But the RSI for the daily chart is looking pretty nice. As you can see right here, when we went from 1044 to 680, the RSI came down to the 50, 53, 51 area, and it's been sitting there for a while now. So based on that, it seems like they're consolidating in this area, this price area, $8 area, the low $8, the mid $8 area, because the RSI is at the 50 and it's just very stagnant there. It's flatlining right there. So what it could mean is that they're loading up. But the thing about it, the volume is kind of low. But one thing that I do see that's positive is that October 2nd volume was 148 million, and October 3rd volume, which was Friday, is 240 million, and we closed green. So based on everything I said, I'm more positive for a nice green week. It looks more likely that we may see a green candle for this weekly, only based on the RSIs at the 50, and this green volume bar is higher than the last one, the last daily one, and it's overarching the last 4 daily red volume bars. So that's good. That's good. Could be a reversal coming up. We have to see. We got to see about the shutdown, and we got to see if any news comes up for the housing market. The data. We got to see the data also. But as far as technical, the charts, technical indicators, we are in a good place for the daily. Not for the weekly. Weekly, we're not there yet. I want to see this come down a little bit more. The RSI come down some, the MACD come down some. But the daily chart looks decent for a possible, green week, depending on the data and the news and the shutdown. All right, everybody. Hope you enjoyed it. Subscribe, like, comment if you have any questions, and don't forget to join the Discord. Take care.